on to our first discussion and on to the Money Show. We make sure that we just don't talk about investing in mutual funds, but also help you meet the brain behind these funds. In this week's Meet Your Fund Manager segment, we have on board Sailesh Rajban, who is the CIO, Equity Investments at Nippon India Mutual Fund. And today we will be discussing Nippon India Innovation Fund. Hi, very good evening, Sailesh, and thank you so much for your time to ET Now. Firstly, tell us more about this Innovation Fund. We believe that this is an NFO. So tell us more details about the same. How big is it and what kind of a response you're expecting from the same?
See, the focus of this innovation strategy, the fund which we have creating, is primarily the fact that there will be a different segment of businesses which will win market share over the next 10-15 years versus what has been the last few years. Last few years you've had a lot of businesses which are traditional, have done well, but there are a lot of businesses which the winners for the next, say, 10-15 years will be very different. These businesses and companies will have material investments in research and development, or may have a business model design which is very different from what traditional players look like, and hence they will have possibly a better right to win. We have seen these kind of businesses do well over the last 10, 15, 20 years in the US, which is generally ahead of most countries in the world in terms of innovation, and I think that space is starting to happen and beginning to become important in India, especially where a large amount of private capital has gone in the last 10-15 years. What is important in this particular space is this capital in the private equity side which has gone into would look for public market participation, and hence a large number of companies in this space will also list. We also have a good number of multinational businesses with strong global capabilities and their own R&D being world class, with their Indian subsidiaries having access to that. That also provides an additional area where the fund will find companies which can be a part of this portfolio. So our approach to innovation is very simple. Either the business model, either the R&D investment, or basically something which is disrupting the existing space and creating new markets. So these three categories will account for a large part, nearly 80% plus of the investment in the fund. And we think what's happened in the last 10-15 years in the US, to some degree in at different level, could happen in India as well, where you would find these innovative companies gaining market share, having better profit margins than what traditional companies would have, and possibly having growth rates which are ahead of what the average index growth rates can be. So this is the universe we are targeting to create and construct a portfolio with a medium to longer term view. We are looking at investment horizons in excess of 5 years when investors are coming into this kind of a strategy at the minimum, because given that this will not be like a traditional diversified equity fund, this is more a thematic fund, it does require a horizon of 5 years, 7 years plus to really capture the whole theme and the opportunity. And I think we are seeding the product today so that as and when this market also grows and new businesses like software as a service companies and many EV businesses, all these lists and also become a part of the portfolio over a period of time. So I think it is playing into the larger theme where innovating companies we have seen generally have margins and profitability and growth better than what average traditional companies can be. And our belief is the winners of the last 5, 10, 15 years may not necessarily be the largest market value creators in the next 10-20 years. So I think this is the differentiation we're trying to bring in terms of launching this innovation fund.
Since the NFO has been open since 9th of August and it's still some time, that 23rd of August is the end date. So if I may ask, what kind of a response you're getting from the markets until now?
So our conversations with the various partners is reflecting, and we are communicating the differentiation in terms of the product we are bringing to the market, and we are positioning this as a thematic product itself. So I think that's the communication which has been happening, and it's more a medium-term opportunity which we intend to capture by launching the product now. And this product generally will have a portfolio construct which will have 80% plus innovation companies, companies with differentiated business models versus a traditional equity diversified fund which may have a large exposure to index companies, and generally you've seen traditional companies having much larger market caps. So our idea is to communicate this, and that's what we have been doing, and we are finding seeing the differentiation of the product and communicating that has been important, and that's what I think the investors are looking forward to.
Shailesh, you are telling that this is going to be 80% in terms of the companies that are investing in some innovative sort of a thing. So exactly, if you can just highlight a couple of sectors that are that will be the key focus. There is definitely a difference between the emerging sectors as well as the traditional ones. But in context, if you can put it, are there any new age tech companies that are a part of that? From R&D space, are there any pharma companies that could be a part of it? Any sector that is in focus currently?
Yeah, so when we evaluate the universe where innovation is really happening, I think there are 2-3 important or 4 important categories where these things are working around. You have highlighted companies in pharmaceuticals investing in innovative R&D and selling patented products in the US. There are a few select businesses which are attempting to do sizable investments close to $500 million a year on R&D and trying to create opportunities internationally. So those companies are one area of investment. Second is a lot of multinational companies who have capabilities which are driven by their global R&D, and those businesses have a significantly long runway in India because their kind of businesses, the large projects and all which require these type of capabilities of the multinational companies, are just starting to happen in India. So you've got a good set of multinational companies across engineering, manufacturing, companies in innovative companies who serve across industries, even in healthcare, even in some other areas where they have differentiated products, which in India that kind of work is not happening specifically. So these are companies having those capabilities which will be at the table. The third area is the new age companies which you have talked about. A few companies are now emerging from the in the listed space where there is a right to win with dominant market shares, and because of what's happened in private markets, you're seeing valuations here getting a little bit more sensible and rational when they would look for coming out to public markets and list. And I think there are a lot of companies who need capital and would certainly want to access public market, given that there is clearly a funding winter, as they call it, in the private equity space or the unlisted space. So I think these set of businesses who have created business models which have at least significant market shares already and have a path to profitability are the kind of businesses we are looking to participate in. So these segments will account for pharmaceuticals, engineering and manufacturing, energy transition space where people are investing significantly in new energy, in solar, wind, and several other areas, the transmission distribution value chain, because that will have a lot of innovation has to happen there to be able to handle storage side, electric vehicle side. So a lot of these areas will be an important part of the portfolio construct. So it will be across these segments.
While I was reading your Innovation Fund presentation, I could spot that you have highlighted the big shift in some of those traditional sectors where I find banking, auto, as well as media. You have highlighted that how the shift in terms of innovation has happened in at least these sectors. So just wanted to understand that the companies which are making a shift internally, who are basically from the traditional business and then making a shift, be it EVs when it comes to the autos, and they are focusing more on that, will these companies be a part as well? And along with that, what kind of a return expectation will a customer be having from this fund? Why I say so, I just wanted to understand what's the understanding in terms of why the market will give premium to these companies, and what's the fund thinking on those lines?
Yeah. So interestingly, existing companies also doing significant innovation. They cannot just be an efficient player, but they have to do significant innovation, a business model change, or their share of revenues from new age or share of revenues from new technologies rising sharply or at least will transition meaningfully in the next few years, could be a part of the opportunity in the portfolio. So it could well be businesses. In simple terms, any innovation has to lead to much higher profitability or much higher growth than the competition in the same sector. Those will be the deciding factor in terms of how the construct of the portfolio will be. To your question on what is the opportunity here and why this segment should be there. See, we have seen generally when the segments are small and when they are emerging, that is where the biggest value creation starts to happen, because then with these companies possibly growing at maybe 50% higher than the growth rate of indices in some cases, the kind of value creation they can do it over the next few years could be fairly significant. Obviously, they come with risk of being emerging technologies. They come with this thing. So for that reason, you have a balanced share of multinational companies with strong capabilities, Indian companies with strong R&D capabilities, and new age companies as a combination in the portfolio. Also, if you look back, a lot of businesses today which are larger part of NASDAQ, right, have actually been very young businesses 15-20 years back. India has been in that journey a little behind because it needs a lot of capital and a lot of innovation has happened in US. But I think the relevance of that innovation in India is starting to be high. And a few international businesses will certainly have larger market shares in India, which may not be able to participate directly. But I think the opportunity for a lot of Indian businesses also to come out and gain market shares in these areas remains. So I think the scope is fairly large. And generally, I think the market will respect companies who are creating larger markets, who are have a business model where they can earn better profitability than traditional businesses over the medium term, and who are growing faster than the market. So given this construct, the opportunity and possibility for investing in this portfolio as a thematic investment with the medium term view, I think is an interesting opportunity.
More about reinvesting as well as what kind of payment options will be there in this particular fund.
See, this will be an open-ended fund, and after the NFO closes, this will be available during NFO and after the NFO also for subscription. And people can choose either a systematic investment plan based on their needs, or they can choose lump sum investing based on. So it's open for subscription post the NFO period as well.
Any take on the payout option as well as reinvestment options?
See, like any equity fund, there are options where there's a dividend payout option and the reinvestment option which is available. When you look at investing from a 5-year, 10-year kind of an horizon, because the thematic funds require that kind of an approach in investing, I think generally participating for longer term growth is actually what will really help investors over the medium term. So generally investors choosing a long term strategy prefer growth as an option, and that becomes a main option because you're willing to participate in incrementally growing your investment for a longer period of time, because these kind of businesses tend to have generally very high growth rates, and they require and incremental capital getting deployed at higher growth rates provides you one option. Investors who wish to have a dividend option or a payout option are also welcome in that particular strategy. But generally, given the nature of the strategy, given that it's thematic, given that it is longer term in nature, a growth option is a meaningfully a good option from investors to look forward to.
Before we let you go, and this is the new fund that is there for all the investors, and you're positioning it as a thematic fund with the volatile nature of the market, and recently we have seen the markets flip-flopping in terms of that 20,000 mark on the Nifty 50 index. We are now down to 19,400. We are trying to defend that. So going ahead, what sort of a comparison or what sort of a return expectation you are expecting from this fund with respect to the benchmark indices? If you can just help us with your expectations, that will be great for the viewers then.
Yeah. See, logically, given the universe comprises companies which will be higher on quality, higher on growth, and even higher on longer term growth, I would say, I think these type of businesses should do reasonably well over a period of time. Comparing it with the traditional benchmarks, I think over the longer term, these set of businesses should end up having greater profit share. And generally, when you have that kind of a thing, the possibility of delivering well in terms of returns also exist. But we must realize that these businesses take a meaningfully long period of time to mature and deliver as well. And I think hence horizon should be way longer to participate in. The idea of choosing this innovation strategy is to give investors a completely different portfolio from what generally investors would find in traditional equity diversified funds which have a large cap or a large and mid cap bias. And we think it will be a differentiated portfolio with, I would say, the construct will be very different from generally what a typical diversified funds would be. And I think the theme itself has attractive opportunities. If you look at it, some of the themes are coming from scratch today. They are very, very young today, and they will become meaningfully large. There will be multiples of sizes they are today. For example, the whole renewable energy theme, which is today fairly small, but it could be way, way bigger in the next 10 years, the way the environment is shaping up towards that. So likewise, even EVs, hardly maybe 1 million vehicles are sold in India today, which are electric vehicles, while globally it's becoming a wave. So that's one space which can be way different in the next 10 years. So we are choosing a high growth strategy here, and with a potential which can be way different from what traditional diversified equity funds deliver. And hence we are coming in a thematic category because it does carry the volatility and the risk which you refer to. So hence investors with a medium-term view, with having a 5-year, 10-year horizon in investing in these kind of spaces is what we are looking forward to. And it's very difficult to talk about returns in the future, but directionally I think the area is very interesting, is what makes us confident of the construct of the product.
And thank you so much, Shailesh. With this, we'll let you go on that. Thank you so much for joining us today on ET Now, and wishing you all the best for this new NFO.
Thank you so much. Thank you.
Okay, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back to take forward the discussion with another expert, so stay tuned for more. Welcome back to the Money Show, and let's get it going with our second discussion, where scammers are coming up with the innovative ways to dupe people. If you are not aware of their latest methods and tricks, then you can easily fall into their trap, resulting in the loss of time, money and personal information. And so on to the Money Show today, we will discuss how you can identify these scams and protect yourself. Let's welcome on board Rahul Tyagi, who is the co-founder of Safe Security, and take the discussion forward. Hi, very good evening, Rahul, and thank you so much for your time to ET Now. Firstly, there are a lot of scams that are happening, and we have also listed down to tell our viewers in terms of there's a UPI refund scam, OTP scam, fake delivery scam and whatnot. A lot of scams related to the stock market as well. But since you deal with so many real life situations, tell us what's latest in terms of the scam, as well as how frequent these scams are getting for the people around, and how difficult it is now becoming to actually spot any of the scams that's happening.
Thank you so much, Srishti, for having me, first of all, and it's a pleasure to always be on your show. So, I think you rightly said that the scams are getting more innovative thanks to AI and so on and so forth. The latest scams which are coming right now is AI-based scams, where criminals will be taking an audio note from your WhatsApp messages, or they will call you and they will have a conversation for 5 minutes and cut the call. But in that time, they will record your audio, and with the AI, they will map your parents or any elderly member in your family and use that voice to ask money from them, and for a short period of time. For example, they will call your family member and say that I'm in trouble, I'm being arrested by the cops, and hey, please talk to my lawyer. And that conversation is AI, and then as you transfer the call to the lawyers are the criminals, and then they will convince your parents or your grandfather or grandmother that yes, he's in trouble and you need to pay money to them. That's the one of the latest one. But if you talk about the traditional way of scams like OTP based frauds and fake delivery scams recently came to the picture, where one thing which I want to aware all the people who usually shop from Instagram based websites where they find some lucrative offers of t-shirts or some gadgets or mobile phones. So these criminals will run a fake page on Instagram and with a supported website. And when you go on purchasing those websites, you will see a very crazy price, and they will say only 24 hours to purchase that. And when you purchase that, the only condition to purchase those type of items is with your only credit card. Now, when you fill the credit card, you think that they are not going to save your credit card details along with your CVV number. But in the background, once you fill it, they will take the order, but also they will save your credit card information. Now, if the criminal is from India, he will not use your credit card information in India. He will sell that credit card information out of India. So anywhere the transaction will happen, the law enforcement in India will not be able to retrace those back. So customers need to be very careful in terms of choosing from where they are purchasing. So these scams are having a shelf life of 1 week. They will run the page, they will put money to promote that Instagram page so that you will be able to see on your home screen. When you purchase that, after 1 week, the website will be disappeared, the page will be disappeared. So these type of scams are highlighting nowadays, seriously.
Oh, that's a new information for me as well, Rahul, in terms of the AI scam, especially that people are using AI to scam or to cheat other people. But when it comes to finding out the ways that how can one protect in terms of getting or being accused with one such scam, so what is your suggestion to the mass audience there, that what steps that they should be taking, as well as what points they need to be really careful of?
Absolutely. I think so. I think the biggest worry is for the teenagers and the elderly people, where these criminals play on your fear and the urgency. So, for example, you'll get an SMS from Paytm or any other wallet that your money has been deducted from your wallet. You'll get an SMS with a link that please click on the link to see how much money you have spent, where you have spent. Now, what people do is in the urgency and hurry, they will just click on the link. So they have to avoid that. In case you get any message either from your bank or your any wallet, you need to go to your wallet application, official mobile app, or the net banking, and check whether that transaction has taken place or not. That is point number one. Point number two is that usually they will come up with so many lucrative ideas to really push to play on your greed that you're getting something very cheap and so on and so forth. So one thing you need to keep in mind that apart from very recognized websites, which can be e-commerce website or some other shopping websites, do not hurry in terms of purchasing something, especially from the Instagram pages or any website which is not known to you previously. Now, if you talk about the mainstream e-commerce websites like Instagram, the Flipkart or Amazon and so on and so forth, that we know all about. But if you talk about some new ones which is having no head and tail, no address is written on the website or the application that who is the person who is behind it. And even for the applications, if you are purchasing any and downloading any shopping applications, you need to ensure that while downloading, if you go scroll down on your Play Store or iOS store, you will see the company's email ID, company's website, and company's corporate headquarter address. Usually the fake application which takes place on these frauds, they do not have any address, and they usually have their Gmail ID or a Yahoo ID. These are the things which are very, very things to take in care to look at before you're going for the shopping. And the last and the least thing is make sure that you avoid saving your credit card informations, and always have that much amount of money in your wallets which required for a certain type of payment. For example, if I want to shop something from Paytm which costs me $500, then I will go to my online banking and I will transfer the UPI amount 500 rupees in my Paytm, then only do the purchases. So as per the requirement basis, you transfer the money from your main account to the wallets and then do the purchases. Because in case someone try to do a fraud in your wallets, you don't have that money, right? So that will not work on them. So these are things they need to be aware of whenever they're doing, and these I think will help them to stay away from these kind of frauds.
These are the quick tips by Rahul, where you can prevent yourself falling a trap of being a trap in any such scams. But Rahul, two things happen. Firstly, is the people actually take advantage of the urgency. They are in a hurry to get the OTPs and the payments being done. That is one great thing that you have highlighted. But the other thing is phone hacks. Because I was reading that there are tricks then where they can get that virus into your phone and then try to steal the information. So in order to prevent this one, are there any applications, are there any sort of a means to actually knowing that what exactly is happening with the phone, any scanners that they can run on a daily or a weekly basis, so that they are aware that what's happening inside the phone and then maybe prevent one such fraud?
So there are two ways, Srishti, someone can hack your mobile. I think this is for people who give their mobile phone to their children to make sure that they sit in a quiet place and play the games. So usually this is a tip for the Android users. If you see in the past 5 years, iOS is considered to be a very secure operating system because it is a closed operating system. But when it comes to Android, Google makes Android and give it to all the manufacturers, and then manufacturers do the tweaking with their operating system as per the hardware of their mobile phone. So for the Android users, it's better that they ensure that if they're giving their phones to the children, because when you give any phone to your children, they will install a game out of the Play Store sometime, which is considered to be a paid game on Play Store, but freely available on any pirated website. When you install that game into the phone, it will ask you certain permissions. Like all normal application, whenever you install, they ask for certain permission. But in particular, that application, along with the game, inside that game, they will ask you a permission for the malware also. So once you install that application, it can take your SMS, it can remotely take your screen, you can take care of your browser saved password, your WhatsApp chat, so on and so forth. So that is the one tip they need to ensure that make sure that whenever you give your phone to your children or whenever you are installing any application, do not go out of Play Store and download from any third-party applications. And that will be a good tip for them. And in case you think that you want to identify, you need an application badly and it is on Play Store, but you are not sure that application is secure or not, you need to go to the comments of the users which are given on that Play Store application, because sometimes when someone has used that application, he becomes a victim and then he posts those comments. Usually these companies cannot delete those comments, so that can be a very good highlight for a user to be worried about whether they should go for that application or not. And it's all about installing a malware application accidentally or intentionally, which can give a remote access to your mobile phone to anyone. And to protect it from in a very normal way, please have a free of cost or a paid antivirus solution. It will cost you about 500 rupees, any antivirus, because so mobile phone is not all about your data, it's about your personal information, so on and so forth. And once it's going to public domain, criminals can use in many ways to extract money out of you. So at least for the least security, have a good antivirus purchased on your smartphone.
Okay, thank you so much, Rahul, for highlighting all those details for our viewers. With this, we'll let you go on that. It was a pleasure having you on the channel.
Same here. Thank you so much. Bye-bye.
Okay, so that was all the discussion about how can you prevent yourself from falling for one such trap by the scamsters. But with this, viewers, before we slip into a short break, let's tell you what you will be expecting in tonight's episode of Leaders of Tomorrow, as IDFC First Bank present Leaders of Tomorrow's Independence Day special. We are in conversation with Nishad Forbes, past President CII and co-chairperson Forbes Marshall, to discuss the evolution of the Indian economy, changing perception of India, role of MSMEs in boosting the growth trajectory for the country and more. Let's listen into this one.
In what ways do you believe the growth and empowerment of MSMEs can contribute to the overall socio-economic development of the nation?
So MSMEs are a very important component of any economy, and especially any large economy. And they are for a few different reasons. First, it's how you get new firms. New firms start up as small firms, and some of those grow into big firms given the right environment and the right strategy over time. But MSMEs are also an important part of the economy because they tend to be very employment intensive. So, for example, in India, MSMEs dominate the hospitality industry, the retail industry, the logistics industry, all of this, the tourism industry, all of these are high employment sectors. So MSMEs account for a very large share of employment in the country. And that is very crucial for an economy like ours that's consumption-led. Consumption accounts for about 60% of our GDP and also our GDP growth. And if MSMEs thrive, then so does consuming power by the wider part of society, and the wider economy does well as a result.
And for this exclusive conversation, tune into Leaders of Tomorrow tonight at 10:30 p.m. only on ET Now. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back to the Money Show, and now it's viewers, it's time to take all your mutual fund portfolio related queries, and to answer the same today we will be joined by experts. But before that, we know that there are a plethora of funds that are available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio, and what are the criteria that you should be looking at to help you navigate through this maze? We have on board Amol Joshi, founder of Plan Rupee Investment Services, and also do not forget to send us your portfolio related queries on our WhatsApp number, that is 865-797-4571, or you can also email us your queries on themoneyshow@etnow.tv. So let's get started. And firstly, Amol, thank you so much for joining us today on ET Now, and a very good evening. Let me take the first query then, and we have a live caller with us. His name is Mithilesh Kumar, and he's from Bihar. Hi, very good evening, Mithilesh. Please go on. We have Amol onto the show, and he is here to help you better with your investments.
Hello, ma'am. Hindi. Talk in Hindi.
ओके मिथिलेश जी, हमारे साथ अमोल हैं और ये आपके प्रश्नों का जवाब देंगे. आप अपने पोर्टफोलियो से रिलेटेड जो भी क्वेश्चन है इनसे पूछ सकते हैं.
नहीं मैम, अभी हमको इसके बारे में अभी नई जानकारी देना है. ठीक है.
ओके. There may be some confusion, and we don't know that Mithilesh says that he doesn't want to get his portfolio related queries answered. So let me move on to the next, Amol, and this one is an email query. This question is from Mandar Halbe, and he shared a long list of portfolios. He has around 10 funds in his portfolio, and his vision is also long term. He wished to stay invested for the next 10 years. He has done SIP in mutual funds listed below, and would like to know if there are any changes that are required. Amol, quickly I can just read out the names for our viewers so that they can also relate that if they have some fund or not. Parag Parekh Flexi Cap, Aditya Birla Frontline Equity, ICICI Prudential Value Discovery, Kotak Flexi Cap, Axis Small Cap, ICICI Pru US Blue Chip, Motilal Oswal S&P 500, Canara Robeco Small Cap, Nippon India Flexi, as well as PGIM Mid Cap. So out of these 10 funds, do you believe that any of these funds needs a revision, any addition or any deletion from the list?
Srishti, hi, good evening. Thanks for having me over on the show. The question that Mandar asked is any changes required in SIPs. So before we actually go to schemes, what I would suggest, Mr. Mandar, is to get to know once and for all that 10 schemes are not required for a 40,000 rupees worth of SIP amount. So this is not necessarily about the amount as well. For our clients' portfolio running into tens of lakhs, millions, or even crores of rupees, we are able to build a very diversified portfolio across asset classes in maximum 6 schemes as well. So most of the times the confusion that people have, people think that if I get more schemes in my portfolio, I will get more diversification, or if I get more schemes every time choosing a top scheme, I'll get more returns. Both of these are myths. This is not necessarily true. What you'll actually get is you will get the weighted average return of your entire portfolio. And for this very reason, you do not want to have tens or maybe dozens of schemes in your portfolio. Now, coming to schemes, Mandar, for your overseas mutual fund requirements or investments, you have chosen 2 schemes. One is the NASDAQ Tech, and second one is the US Blue Chip. So I would say cut down from these 2 and stick with only the US Blue Chip. In other words, I'm trying to say that change your allocation or add your NASDAQ allocation also to Blue Chip, because as such, you will get probably 30 to 40% NASDAQ exposure in US Blue Chip. That's number 1. Number 2 is you have 3 FlexiCap schemes. From those 3, please reduce those 3 to 1. And if you ask me which scheme to keep out of the 3, I would say Parag Parikh FlexiCap is the one that you want to stay put with for longer period of time. So this itself will bring you down from 10 to maybe 7 or 8 number. Remaining 1 or 2 schemes, you can probably try to change or rebalance during your annual portfolio review. Quickly, a 40 or 42,000 rupees SIP that you have, over a 10-year period, if you get a 10% CAGR from this portfolio, you will be able to accumulate close to 94 lakh rupees. So that's if you try to take a little bit of extra effort by doing SIP top up or SIP step up, I think you'll be able to cross the 1 crore magic number in 10 years time.
Okay, moving on to the next query then, Amol, and this one is quite interesting. This one is from Abhishek Agrawal. He says that he's a business owner and every month he can manage to invest rupees 2 lakhs. On the other hand, he has around 80 lakhs of saving and his target is to achieve a corpus of 10 crores in the next 10 years. What he's already invested in is rupees 3 lakhs in tax saver funds, name as Parag Parikh, Mirae Asset as well as Canara Robeco, and he has planned to invest through small cap as well, a small case as well, but unable to figure out the right one. So he doesn't bother to invest either in the small case or in the mutual funds, but the sole purpose is that he should meet his target, which is 10 crores in the next 10 years. Do you believe that the amount of lump sum money as well as SIP that is planning, he should be able to achieve 10 crores? And if yes, then which are some of the options that are available for him?
Yes, Srishti, you are right. As you rightly mentioned, this is a very interesting question. And going by the last bit that we have received from Abhishek Agrawal, he says that I don't bother to invest in mutual fund, but I should meet my goal then. So I think he's saying that if I choose mutual fund, my goal essentially should be met. In the sense, I should be able to accumulate 10 crore rupees worth of amount. So first and foremost, going by the projections, let's see how much can he actually get to. So existing 3 lakh rupees lump sum and 80 lakh rupees of existing money in hand that you have, Abhishek, plus 2 lakh rupees of SIP, if this entire amount is invested in the market and over next 10 years, you are able to get a 12% kind of CAGR, you are able to reach around 70% of your goal. That is nothing but a 7 crore rupees instead of 10 crore rupees that you have in mind. That's point number 1. Point number 2, to accumulate 10 crore rupees, you would probably need a CAGR in excess of 17%, almost 18%. So I would say 18% CAGR today, when we have market in a price to earning multiple in excess of 20 to 23, I would say that this appears excessive. I encourage you probably to increase your lump sum amount or to increase your SIP amount or to increase your horizon. But if none of these are possible, then you actually have to tone down your target from 10 crores to something that is more reasonable, which is to the tune of 7 crore rupees. That's the sum total of the where you can actually reach. Now, coming to your option of if I should invest in mutual fund, I should meet my target. You also said that you want to invest via small case. Now, all the options, small case, direct stocks or mutual funds, we are talking about all the options that are equity oriented. And since all the options are equity oriented, equity does not offer you any guarantee, any comfort that you will essentially reach your goal. It is another myth, Srishti. In previous question, I tried to dispel 1 or 2 myths. There is one more myth that if I take more risk, that means I'll get more return. This is also not necessarily correct. You have to take risk that is in line with your risk appetite, so on and so forth. So I would say if you cannot choose a small case or if you cannot pick stocks, you are better off outsourcing this job to a fund manager. I would say, given the kind of target and shortfall that you have, I would say consult a professional. But at least I would say for your existing lump sum requirements, you can choose ICICI Prudential Multi-Asset Fund and HDFC Balance Advantage Fund. For your SIPs, I recommend you can go with Parag Parekh Flexi Cap, HDFC Large and Mid Cap, Motilal Oswal Mid Cap, and Nippon India Small Cap. But this is a kind of a generalistic list. You should get your risk appetite checked and return expectation in order to benefit from this recommendation.
Okay, Amol, thank you so much for simplifying the investments for him. But moving on, the next query is from Ritesh Shah, and he's also quite aspirational, where he wants to earn 1 crore rupees in the next 5 to 10 years, and he wants to know how should he invest in different investment schemes and what amount basically. He's 30 years of age and his current salary is 1.3 lakhs, and he also has given a list of the investments that he has made currently. Onto the lump sum part, he has invested 50,000 in Axis Blue Chip Direct Fund and another 50,000 in Axis Growth Opportunities Fund. He has invested rupees 1 lakhs in different stocks, 7 lakhs in PPF, as well as 2.5 lakhs is what he invests in LIC. So these are some of the lump sum parts. But on to the other SIP things, he's investing 5,000 rupees per month in NPS and 5,000 rupees per month in post office recurring account. So what's your take on all these investments made by Ritesh till date, as well as what to do in order to achieve that 1 crore mark in the next 5 to 10 years?
Yes, Srishti, Ritesh is also aspirational, wanting to accumulate a sum of 1 crore rupees over next 5 to 10 years. I would say the spectrum is quite broad. 5 and 10, you have actually twice the difference in the horizon. But taking the long-term investment horizon, let me go with 10 years of horizon for Ritesh. Ritesh has existing lump sum of 10 lakh rupees. 10 lakh rupees is the total investment that he has in mutual funds, stocks and PPF. And Ritesh invests close to 40,000 rupees per month. LIC of 2.5 lakh rupees is nothing but 20 or 22,000 rupees of let me repeat. LIC of 2.5 lakh rupees per annum. You can probably, call it a 20,000 rupees per month sort of a SIP or recurring investments into LIC. So 10,000 rupees of such an amount, 10 lakh rupees of lump sum and 40,000 SIP. If this investment grows at a 6 to 8%. Now I have taken 6 to 8%. The reason is PPF, LIC, NPS, post office recurring, all these are predominantly fixed income or debt oriented instruments. And I cannot use the same rate of return that I would typically use for equity or hybrid, something to the tune of 10 to 12% per annum if you have a long-term investment horizon. So going by 6 to 8%, Ritesh will be able to accumulate 83 lakh rupees to 94 lakh rupees, 6% and 8%, two illustrations I have used. This is a significant, you are reaching significantly closer to your 1 crore rupees of requirement. If you want to really bridge this gap of 6 lakh rupees to 17 lakh rupees, you can probably, as your salary increases over next 1 year, 2 year, going all the way to the 10th year, you can probably try to do mutual fund SIPs in equity-oriented fund like HDFC Large and Mid Cap Fund. And if depending on when your LIC matures, if you are close to maturity of your LIC, you can divert that amount as well, probably to mutual funds. But do not forget, since your LIC will come for a maturity, you should take adequate amount of risk cover before you choose any other product. So I would say you have a mild shortfall, about roughly 10% or so, either by increasing your SIPs in subsequent years or diverting some amount from postal recurring deposits or LIC after the maturity. You'll be able to get to your 1 crore rupees of target, Ritesh.
Amol, before we wrap this up, a very short and sweet query by Amya, and she says that she is a new investor and she can actually invest 5,000 rupees per month in mutual funds. So she's looking out for some suggestions on some funds where she can put this money in.
Right. So Srishti, it appears that Amya is a first-time investor. We are not really sure about what is her risk appetite. Assuming that she wants to invest for a medium to long-term horizon, I would say we will try to do the asset allocation for her. But there are two ways of doing asset allocation. You choose different schemes in equity domain, in fixed income, and maybe some alternate asset class like gold or international equity. Or considering her amount of investment is smaller, we can get all of that into one package called as multi-asset fund. So my recommendation is start your 5,000 rupee SIP into ICICI Prudential multi-asset fund. As the name suggests of this scheme invests into multiple assets. Equity is one of the assets, debt or fixed income is another asset, and this scheme also invests into gold. So this gives you a flavor of asset allocation, all that built into a small amount of 5,000 in one scheme only.
Thank you so much for guiding Amya along with all the other viewers. It was great having you on the channel, and thank you so much for your time.
Pleasure. Thank you.
Okay, but with this, viewers, it's time to wrap this edition of The Money Show. It's a goodbye from me and the entire team who put this show together. Thank you so much for watching.